Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Lyanne Alfaro, multimedia producer and strategist and founder of Moneda Moves, Stacey Tisdale, founder and CEO of Mind Money Media, Inc., as well as financial journalist, Kristin Myers, editor-in-chief at ETF.com, and we have Tanya Van Court, founder and CEO of Goalsetter. National Financial Literacy Month is recognized each year in April to raise public awareness of the importance of financial literacy and maintaining smart money management habits. Our panel joins me to discuss the value of financial literacy accessibility to underserved communities and why it's not a one-size-fits-all solution. Ladies, it's great to see you as always. Welcome back to Trade Talks, and Stacey, welcome to Trade Talks. Let's go around the horn here. Lyanne, we'll start with you. Quick overview of Moneda Moves and your role in the FinLit space.
Absolutely. Moneda Moves is a multimedia platform covering Latino entrepreneurs as well as capital gaps in the ecosystem. I come from a storied background as a money and business journalist, so here I'm highlighting a group that has been traditionally underrepresented as well as underfunded.
Right. And Stacey, Mind Money Media.
I am Mind Money Media. We produce content, events, and provide expertise in helping people create a holistic relationship with money. We partner with brands and major media outlets, distribution, to help people examine how things like their race, their culture, their gender, their upbringing, their mindset play out in their financial experience. I'm a more than 20-year financial journalist. I was the first woman and the first African American to report from the New York Stock Exchange, and was just able to see in my journey that there's a lot more to money than dollars and cents, and that's where some attention needs to be.
Yeah, that's a great point that you make. And Kristin, great to see you as always. Tell us about ETF.com.
Yeah, so ETF.com, of course, standing for Exchange Traded Fund. We're a platform where we provide education, tools, and news around all things ETFs, but of course ETFs are essentially covering everything. So when it comes to investing, if you have any kind of question or if you want any sort of information about what's happening in the markets or what's happening in currencies, bonds, cryptocurrency, whatever it is, as long as it's in that ETF wrapper, we are probably covering it. And just like the other ladies here, I come from a financial journalist background. My experience is not as deep as some of the other ladies, but I've essentially been covering the economy and markets now for about a decade.
Right. Well, it's not a one-size-fits-all solution. Just like you, I don't have the traditional journalism background either. And Tanya, Goalsetter.
Goalsetter is a saving, investing, and financial education platform created for kids and then expanded to include the entire family. So we have innovative features like Learn Before You Burn, where your kid's debit card will automatically freeze if they haven't taken their financial literacy quiz for the week yet, because we know teaching kids about saving and investing is so incredibly important, and more than teaching them about sending and spending money. My background is actually that I come from Nickelodeon, ESPN, and Discovery Education, and so it's been my mission to take all of the fun and engagement from the media space into the financial services sector so that we can meet people where they are and invite more people inside who have been left out.
Right, and I think the common theme that we're getting here is that it's not just about money when it comes to financial literacy. So Stacey, in that context, what does financial literacy really mean?
So financial literacy, as we have defined it, we've actually trademarked a term called money lingo. And money lingo is very similar to Duolingo, right? There are building blocks of learning a language that you first need to master. But those building blocks are not by any means the whole of having a healthy financial life. And so financial literacy is, one, understanding the building blocks. So I need to know what an ETF is. I need to know what a bond is. I need to know what a stock is. But just knowing the definition of those, that allows me to show up. Those are a ticket to play and have the conversation. But the real conversation is around the behaviors. Now that I know what they are, how do I live a healthy financial life and incorporate those into my life based on where I am, what my goals are, and what I should be doing today in order to prepare me for tomorrow.
Right, and Kristin, I think understanding the demographics is key to that as well.
Mm-hmm. Yeah, so I mean, I decided to kind of pull some stats, and I'm glad you printed them out because there's no way I could have remembered all of them. But essentially, we do see these continual racial wealth gaps that exist and also gender-based gaps that exist in the United States. And part of that is because there's obviously huge gaps when it comes to investing. So I mean, while 58% of the country overall is investing, that's 66% of white families that are owning stock, about $600,000 when it comes to their total assets that they have in the market. That's compared to only 39% of black families who only have about $81,000 in terms of value for their total stock holdings, and then 28% of Hispanic families and their total value of their stock holdings is only $98,000. So I mean, there's huge gaps that exist there just on the demographics. And the thing is, I always used to say, you can't save your way out of poverty, and you can't save your way into wealth. And so I think so much is always focused on trying to gather as much money as possible, and then we don't go the next step, which is really about how you can kind of build that wealth over time and then pass on that wealth to the next generation, because it's not just about reducing debt and really padding those savings accounts. Definitely important parts of your financial journey, but those are really just the beginning steps. And really when it comes to investing, that's when you're going to start making those generational differences that are really going to start to kind of reduce some of those gaps that we see currently.
Right. And Lyanne, what can you tell us in terms of entrepreneurial statistics and demographics within the Latino community?
Yeah, absolutely. I mean, by and large, Latinos do lead in terms of entrepreneurship generation. We have 34% new business generation year over year. We lead in terms of cohorts of new business generation. And today, there are more than 4.7 million firms in the US employing more than 3.5 million workers. So huge boost to the economy. In terms of Latino entrepreneur behaviors, they tend to, and this is from having spoken with them firsthand, having worked on articles on this, they tended to go to their savings and their investments first to empty that, to boost their businesses, to fund their businesses. Part of the reason that this happens is because they have incredibly low approval ratings and approval on loans that they can acquire, as well as VC funding or any other investment. So because of these imbalances that exist, they tend to turn to their savings and say, hey, you know what? This entrepreneurship endeavor is my investment, which is amazing in terms of entrepreneurship and what it contributes to the country. But in turn, then you end up looking at how much they have saved for the long term. That's a very risky bet, right? In terms of playing for the long term.
And Stacey, and Tanya, I think I called you Stacey before, but
Yes.
I apologize. This is what happens when your talking points are out of order of like how you have people sitting. But this actually segues really nice to you, Stacey. I think it's interesting that underserved communities, you pointed out, are embracing technology to be able to participate in the financial literacy landscape.
Yes, I think you really saw during the pandemic when the veil was lifted, and you could really see the economic disparities in the United States. And a lot of people in underserved communities just they've always acknowledged that this financial system was literally designed against them. I mean, it was illegal going back to the GI Bill, when soldiers returned from war. Blacks were not allowed to participate in that, those those free mortgages and all of those things. And that's really the genesis of the wealth gap. And when you look at the financial traumas throughout history, you look at things like Black Wall Street, you look at things like the Freedmen's Bank, where newly freed slaves amassed $60 million and the government just took it away from them. There is this distrust that the financial services industry really has to take into consideration when they approach those markets. So technology came in and solved the problem that the government and the private sector and the financial services industry couldn't solve, and they leveled the economic playing field and they made entry points accessible. I remember speaking on a very popular morning show called The Breakfast Club years ago, talking about how the Black community needs to change their belief system that investing is only for the rich. And you looked at that trauma, you understand where that lack of trust comes from. You take in the reality that, Black families are 6 times more likely to be taking care of other family members than other groups. And, it was just something that wasn't for them. And then I'd mentioned the app Acorns, because my son had turned me on to Acorns. By the time I got out of that 20-minute interview, millions of listeners signed up for it. And they, a lot of fintechs, not necessarily because it was their social desire, but just by their very nature, they level the economic playing field. I think the Economic Policy Institute found that online lenders take out about 80% of discrimination in mortgage applications. So now that you've seen that change, what has happened? For the last 2 or 3 years in a row, the largest number of first-time investors to the stock market have been Black. social media has played a tremendous role because overall, mainstream media and all media was giving so much attention to the bull market. People wanted to participate, so then you had all these influencers and coaches emerge. So then you had people teaching about the markets that were relatable. And that's what I think, it's just a wonderful thing to see happening. And while I know the numbers are there about the wealth gap and things, I urge people to look at the trends within the numbers.
Yeah, well, I mean, that really is the key to having accessibility to whether it's financial literacy or financial planning. And it's not just about saving and investing. I'm talking even about basic budgeting and, you know, credit versus debit in the household. There are a number of households, and we know this in underserved communities. Lyanne, you and I spoke about this a number of times, where there's multi-generations living in one household, and there could be one person that's responsible for caregiving,
Different attitudes.
one person that is responsible for, you know, paying the rent, or in many cases, I mean, we know in today's day and age, which is why birth rates are low, as we were talking about before, both parents have to work. So there's a lot of different, you know, variables in some multi-generational households.
Yep, absolutely. I mean, with Latinos, that's like the biggest trend, right? Latinos do lag when you look at the bigger picture in terms of home ownership, but we've been on the rise over the last few years in terms of acquisition. A lot of that lends itself to multi-generation. So, for example, take me, someone first generation says, hey, mom, dad, I'm going to buy this home and you're going to live in the apartment downstairs. I'll live down like in the first floor, and then we'll have our cousins live downstairs, and we'll kind of like have rent paid to each other, but it's much more flexible in terms of like the rent and in terms of like affordability. So that is something very common that Latino communities are doing in order to provide housing for their family.
It's interesting also I mean, money's greatest gift is that it can really reflect back to you where you are and are not living in line with your authentic priorities. And it can really reflect back to you the storylines and the messages that you're buying into. I was giving a speech at a large university, and after a speech, a girl walked up to me and she was crying, and I was like, was my speech that bad? And she said no. And I was, one of the things I have people examine, I call them money scripts, those conditioned messages we get. There's childhood scripts, social scripts, cultural scripts, and she said no, and then she said, I just got accepted into Harvard Business School. And I said, no, I really don't understand why you're crying. And she was a Chinese woman, and that culture, debt is the Antichrist. And it makes you just, it's just like, it's really attached to character, and it's just not something taking on. So the thought of her taking on student loans to attend Harvard was, her parents were just, don't even, you know, think about it, and made her feel badly. And what she was crying about, and I'm glad we connected on that level in my speech, was that be aware of your cultural money scripts. It's not you. It's not, you're not a bad person. It's just, this was your parents' conditioning. Right. And it's not something you have to personalize and internalize, but really having that, I think we're getting there. You hear so many more people talking about behavioral finance and mindfulness and money and stuff, but you have to have that intimate relationship with money if it's really going to serve you.
I think that's changing over the generations, and Tanya, you point out with Goalsetter that those key areas of concern, budgeting and saving and credit and debt management, you can't get to investing and wealth until you can't go from A to C without getting A and B done.
That's exactly right. It's funny you mentioned Harvard. We just launched a study at Harvard, Stanford, and the University of Pennsylvania called Are You Financially Smarter Than a 12th Grader? It has 15 high school financial education quiz questions, and on average, the students, and we had more than 1,000 students at these 3 amazing prestigious universities.
I took that.
You did?
I did recently.
I love it. Okay, so that.
Penn's also my alma mater. So.
And Stanford is my alma mater, see? So neither of us can feel bad about this, right? But on average, they got 51% right. And, you know, the core topic areas were things like, do you understand the 50-30-20 rule? So 93% of these kids have a debit card. That means they know how to spend money and they're doing it every single day. But they don't understand budgeting and the 50-30-20 rule. They didn't understand the difference between compound interest and simple interest, right? So 48% of them didn't understand the difference between those two. So yes, I mean, it really does start with the basics of understanding budgeting and saving and emergency funds and the difference between putting your money in a high yield savings account versus a standard savings account. But and then it exacerbates and extends to, how do I build wealth in this country? And how do I build wealth with extraordinary economic pressure from student loans and higher than ever mortgage prices? These kids today are facing an unusual economic situation. We just talked before we came in here about the fact that this is the first time in the history of America that a 30-year-old today is in a worse financial position than their parents were when they were 30, right? And that's a real problem, and it's an exacerbated problem when your finances are bad, but your financial education is worse.
Right.
So we're in this really interesting space right now where, as you're mentioning, Tanya, we have such access to education, both free and also paid, whether you're attending university or just kind of going online or accessing on social media financial education. And so while we're seeing this sort of kind of greater entree into education, we're seeing women, particularly Black women, right, really seeing huge jumps in their bank accounts and their salaries. But at the same time, the financial literacy has not caught up at all to, especially in underserved communities, the kind of financial wealth that's actually increasing and getting better over time. And so we have this weird dichotomy where, you know, Stacey was kind of pointing out, you really have to check in with yourself about those, as she was calling them, money scripts that you've really been taught over your entire life, whether it's cultural, whether it's religious, whether it's gender-based, right? We all have them. Every single person has them. And I think really the key part to financial literacy, and also a little bit, and you mentioned kind of like why it's not one size fits all, is because every single person is kind of carrying these chips on their shoulder.
Personality.
Yeah, exactly. Yeah. These financial personalities, but also these financial burdens that another person has no idea about, and also can't really help them with, right? And so a key part of financial literacy isn't just, you know, as Tanya was mentioning, kind of learning the vocabulary and learning what the things mean, right? What is a bond? What is a stock? But it also is actually checking in with yourself and saying to yourself, why do I hate debt so much when we see the wealthiest of Americans loving debt?
Exactly.
And using debt to create greater wealth, right? Why do I have such a problem with it? And what debt should I actually avoid, and what debt should I really embrace?
Right.
And once you really start to kind of check in with yourself and undo some of those really harmful financial narratives that you've been taught, your parents have been taught, your grandparents have been taught, then you can really, I think, start to make further moves to essentially improving not only your own financial wellness, but the financial wellness of your family and generations to come.
You're touching on something so big. It's, I had the traditional, I was a cash manager on Wall Street for a commodities firm. I invested $90 million a day. Then I went to the Wall Street Journal, you know, CBS, CNN, and I share those things because they gave me a unique vantage point to see how people related to money, and it just didn't make sense. The financial services industry, very specific, you know, save X percent, do this percent, do that, but I could see, yeah, but people don't do that. And nobody's addressing why people don't do that, and that's what drove me. I didn't want to do this, but I had, you know, and it felt like an act of journalism, understanding what's going on with our money and why do people make financial decisions. You really have to understand why people make financial decisions and what drives, you know, exactly what you were saying. And I thought when President Obama won the first time, a couple of months before, when it looked like he was going to win, you saw the number of people in underserved communities going for financial education, going for mortgages, going for these things, you know, for information, enrolling in courses about money skyrocket because now they had, what is he calls it, the audacity of hope.
Right.
And you know, those are really the things that drive financial decisions. Last thing on this, I think the Center for Law has an amazing study that graduate law students, 74% of men negotiate their first salary, 7% of women negotiate their first salary. That costs them $850,000 over the course of a career. Now imagine that invested.
Right.
So when we talk about, you know, the number stuff is easy. It's not rocket science, but what can we do to empower that woman so in these major money moments, she knows herself well enough to make those decisions? That's financial literacy, and that's where
that's why you ladies need to keep doing what you're doing, and time flies when we're having fun, and we need to cut it here. But thank you for all of your insight as always, and thanks for joining us at MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.